Hey guys, good afternoon, everybody. Today is Wednesday, December 6th. It is 2:03 right now. Our scheduled mentoring sessions for 2 o'clock. Starting a little late because I had to make some adjustments here. I'm just going to go ahead and set up this room real quick and we'll get started shortly with our mentoring session for today. Just got a couple of things here to update. All right, looks good. Good. There goes MC4 logging off for the day. All right, looks like we are good to go. Let me get this link sent out to you guys here in the premium. I think the last time we went live was the 14th. There we go. All right, so let's get a few moments for people to make their way in. A couple of things here I'll cut for so today's mentoring session topics. And we'll try to keep these in order. Let's see. So I'll cover I guess the indicator should be covered first. So we'll do the MPS momentum pullback scalp levels. Indicator. K2 trailing stop indicator. This isn't available yet. I'll be releasing soon. What else are we going to cover? We don't really need to cover the momentum pullback scalp. We'll cover that in conjunction with the indicator. What else do we need to cover? Breakout. Breakout V3 and breakout V3 continuation. And I think other than that, it's just a high-low scalp V2. Yeah, I think that's about it. So if there's anything else that you guys want me to cover, feel free to put your questions in the chat and I'll cover whatever you guys need help with. But for the most part, I think this is going to be the main topics that we'll be covering during this this mentoring session. I feel like there's stuff that I'm missing, but it'll probably come up along the session. So oh yeah, sorry. And then the news strategy too. So thanks, Oscar, for mentioning that. Yeah, definitely. So I forgot what do we call that? News something. We called it, I think I put it over here somewhere. News correction strategy. So I don't know the name for it yet, but we'll call it that too. So news yeah, we'll just do news correction strategy because I was going to put news reaction, but we typically want the markets to be manipulated and then continue in that direction. So yeah, all right, guys. So I think this is pretty much going to be, the main topics for today. If there's anything else that you guys, and then also Alan wants me to cover. We'll do that first actually, because that's probably going to be the easiest thing to cover since there's nothing new about that. So Alan wants me to cover how to draw zones using rectangle tool. All right, so I think these are all the topics for right now. If there's any other topics that you guys want me to cover, feel free to let me know. just a heads up, this mentoring session will probably run for a while because there's a lot of stuff to cover today. But if there's anything else that you guys want, feel free to put them in the chat. Again, we do this once a month, so I'll try to cover as much as possible. If there's any examples that you guys want to see, if there's anything specific that you guys want to see, any strategies, indicators, anything really, just feel free to let me know, because this session's for you guys. I don't necessarily have to come on here, but I do want to come on here so that you guys are on the same page with everyone else. So we have all this stuff lined up for today. I have a couple questions from Randy as well. So when we get to the high-low scalp V2, I'm going to have a couple examples to go over, basically when to avoid high-low scalp V2s. Yeah, Randy gave me a bunch of markups here, and it's pretty clear just by looking at it here. You can see that market was kind of ranging. I'll show you how to identify that stuff because it's pretty simple. Initially, he just showed me the charts, and I already knew like these were entries to probably avoid. And I'll show you guys when we get to that point. But yeah, other than that, I think that's about it for right now. Let me see if I've updated I don't think I've updated my spreadsheet here. Oh yeah, of course, because we're in a new month. So let me just go check my profits real quick. I want to make sure everything here is updated for the most part. I don't think I've inputted December. So I think I'll start off with this first, just so that we have all of the profits pretty much inputted for November, so we can increase. Okay, yeah, I think that's it. So let me just delete these right here. Let's delete these, shift up, so that we can see what our total is looking like for the year so far, because the total should be pretty good for the most part, I think. We just got to make some adjustments here. Only had one loss for the month of November, which is pretty solid. A lot of people always say that win rate doesn't matter. But if you think about it, the only people who say that are the people that don't have a good win rate. It is with like a lot of things. Whenever people want to hate on something, like, we scalp and people don't like scalping very much. A lot of people actually scalp now, same people who are hating on it. And the thing is, like, win rate really doesn't matter. But if you have a good win rate, why wouldn't you want a good win rate, right? So, we have a pretty good win rate for this month. So we have, let's see, 17 wins and 1 loss. I'll add that to the, or actually, I'll say this real quick. Here, I'll just write this stuff down real quick so that I can add it to the thing. So 13 buys, 5 sells. $17 wins. Loss. 1,800 profit. 18 total trades. So let me just add this. We're gonna add add these numbers to our totals for the year. So we had 130 buys. We add 13 to that, so we now have 143 buys. We have 70. We had 78 sells. When I add 5 to that, so we're going to add that to 83. We have, we had 192 wins. We're going to add 17 to that. My math sucks, so I'm just going to put it on here. 192 plus 17, 209. We had 1 loss, so 27 losses for the year. And then our profit over here, I'm going to add this up as well. So 28,330 plus 1,800, 30,130. So 30. Total trades, we had 218. 218 plus 18. So 236. All right, so let me just add this up real quick. So we had 209 wins divided by 236 trades. Total win-loss ratio of, it just went up slightly. So it was like 88.5 or 88.6, which is great. I mean, it's good. We didn't have like, anything too crazy, but the win-loss ratio did go up slightly right there. So that's pretty much all the stats from January up until November. And I'll just add these trades real quick because it shouldn't take too long, to December. Yeah, Nikki said you didn't really lose that trade. I forgot what happened on that. I can't remember, but yeah, I know it was like a messy trade. This is one of the examples that I was just referring to where I should have avoided it because price went sideways. This is going to go hand in hand with like what Randy was asking about, like, when to avoid these high-low scalp V2s. You can see that there's two zone levels right here. Typically, when there's two levels that are so close like that, you should just avoid it. There's actually three now at this point. So there's a lot of issues with this trade here. This is something that I probably should have avoided. And then also Nikki said that like MT4 was freezing like for a couple of days. If you guys remember that, it was like blocky candles and the market was freezing. So one reason that we could have avoided this was because price was ranging. You can see it's an obvious range. And I think I pretty much fumbled into this trade. But yeah, it's all good. Sometimes you just have to take those losses so that you can learn from it. Because if we didn't take this loss here, then we probably would continue to take these riskier trades. Now that I've seen this, I don't take trades like this anymore. So yeah, no, definitely to get I was hoping to close out the month with all wins, but it's all good. You know what happened. So I'm just going to update these real quick. We had this one, which was on December 5th. So 12/5/23. 12/5/23. Here comes William. William just joined the room. William, you missed the momentum counter scalp today on the live session. I was looking for you during the live session because we took it. Well, I took it. Played out perfect. So this one came up at 6:43. Shouldn't take too long, guys. The entry was, the entry was a buy. It was a win. 100 profit. Strategy we applied for that was E1 variation. I know this is like the one day you missed live session, William, and it came up and I actually took it. I was looking for you immediately. It's all good. So the V3 continuation right here. Copy link. Oh, we only took 2 trades for. Actually, I just realized December just started. I thought December has been running for a while, but it actually just started. So 6:54. 6:54. It was for a buy. It's a win, 100 pips. This is a breakout V3 continuation. Scrolling down further. These are the trades from today. Okay, so we only took a couple trades out. I thought I was missing out on a lot, but not really. This was at 6:35 from today this morning, 12/6/23. The trade was a sell. The win, 100 pips. The entry for that was a momentum counter scalp. So the reason why I'm doing this, guys, is so that you guys can see what strategies are working during what times of the year. So in the future, we come December next year, you guys will know exactly what entries to take. So breakout V3 continuation at 6:59. So I think documenting these trades are going to be super helpful come next year, so that when we get to December, we're like, okay, we should probably stick to V1s, breakout continuation V3s, and counter scalps. This is a breakout V3 continuation. And I think there was one other trade that we took today. We took 3 trades today. Same thing at 7:16. So 7:16, 12/6/23. I think those were buy as well. Win 100. All right. So straight wins for the month of December so far. We've got this added up right there. That's fine. We'll make some updates later, but that's about it for now. Other than that, guys, so if there's any other topics that you guys want to cover, these are the main topics that we'll be covering for today. So first, I'm going to start off by showing Alan how to draw zones using the rectangle tool. Super simple way to draw zones. Next, we'll be covering the momentum pullback scalp levels indicator, the MPS indicator. I'll probably go over some examples of momentum pullback scalps with that as well. Next, we'll be covering the K2 trailing stop indicator. This is the indicator I've been working on. There's still some bugs, so I got to finish pretty much smoothing that out before I release it to you guys. Then we'll cover the breakout V3 continuation, the high-low scalp V2, some examples of when to avoid the trade, and the news correction strategy. And I think that's about it. So if there's any other topics that you guys want me to cover or anything that's not listed here, just feel free to put your questions in the chat, and then I'll add them to the list. So, all right, looks like pretty much everybody's here, and we'll get started right now. So we'll start off by showing Alan how to draw zones using the rectangle tool. I'm gonna go to the clean chart. It's easier for me to draw it over here. So here's how you draw zones, Alan. It's not super difficult. It's actually super easy. So I mean, it depends on like what you're trying to do, but you know, for example, if you're on the 1 minute, and say you wanted to draw, well, I'll just show you how I draw zones. I think that's probably going to be the best way for me to show it to you so that you have an idea of where they should go. So basically, it doesn't really matter what time frame you're on, but the way that I draw zones, and typically they're going to be here on the 1 minute, is first you're going to have an empty chart, right? Once you have an empty chart like this, you're going to turn on your high-low indicator. Your high-low indicator is going to identify higher highs, lower lows, and higher lows. Basically, any high-low zones, right? Where I draw my zones are going to be at the higher highs and the lower lows. That's pretty much the only areas where I draw my zones. So like, for example, here, we have a higher high, right? What I'm going to do is I'm going to open the rectangle tool. To open the rectangle tool, you're going to go over here to geometric shapes. You'll go to the rectangle shape right here. You'll click on that. Next, you want to click on the magnet tool here. You don't have to click on this, but it's going to make things a lot easier. So you can see when you click on the magnet tool, the crosshair is going to latch to any highs or any body levels that you draw. So all I do is I draw a rectangle there from the high point to the body, and that's pretty much it. It's not really difficult. I think something like this is something that you would just have to do consistently and do repeatedly, and you'll start to understand that it's, you know, it's super simple. Typically, I only draw the zones at the higher highs and the lower lows. So if you want to take away all of this noise here, you can go to your high-low indicator, go to your settings, and then check this box right here where it says higher high and lower low only. So you have that on, pretty much takes out all the noise, and then you'll know exactly where to draw your zones. There's no specific zones that you should cover, but I mean, it just depends on like what you're looking for, right? If you want to cover the earliest zone right here, that's typically where I would draw it. I would draw it the earlier zone, but it wouldn't matter because all these zones here would pretty much line up. You know, whether you drew the zone here, whether you drew the zone here, whether you drew it here, it doesn't really matter because it's going to be the same, like basically the same zone. The zones aren't really necessarily used to identify anything specific unless you're taking high-low scalps, but for the most part, you know, that's how I draw my zones. And when I draw my zones there, you can turn off your high-low indicator once you have them drawn up, and the zones here will help you identify where the support resistance levels would be. In other words, where price is likely to bounce. So if you guys remembered from this morning, I drew these zones like super early, so we kind of saw this drawn up wherever it may be. Alan's asking you draw on 1 minute only. So that's exactly what I was saying earlier, Alan. It's up to you. You know, you can draw whatever zones you want. You can draw it on the 1 minute. You can draw it on the 1 hour. You can draw it on the daily. It's up to you wherever you want to put zones. You're obviously not going to put zones all over the place, right? So if you're only trading on the 1 minute, it's not going to make sense for you to draw a bunch of zones, right? I mean, it's up to you. It's up to preference. If you want to draw more zones, you can, but there's really no reason to do that. If you follow me in the morning session, I typically draw on higher levels, but it wouldn't really matter because those levels match up with whatever lower time frame you go to. So like, for example, I typically draw on the 4 hour and the 1 hour. The reason why I draw on these because these are stronger zones, right? But it's not really going to make sense for you to do something like that if it's going to confuse you. You have to figure out what works for you. Do you want big zones? Do you want small zones? Do you want tight zones? Do you want exact zones? If you want exact zones, then you're going to stick on the 1 minute. But if you want to have something that is on the higher time frame, which is going to be a stronger zone, you can. The only problem with that is if you're going to draw a zone like this right here, right? And you go down to the 1 minute, you have this whole area that's marked up, right? So, I mean, you can have that there to identify where the zones are at, but you don't have to because it wouldn't really matter since if you were to take this off and you just draw the 1 minute, you're going to have the same zone right there to identify the range. So, I mean, it's just up to preference. For me, I like going on the 4 hour. Like if I had two zones here on the 4 hour, so let me go back to like 6:30, right? Before market open. So it's hard for me to tell you where to draw zones because everybody's different, right? Some people want a lot of zones, some people don't. So like, for example, here, if you're on the 1 minute, obviously you won't have any zones yet. So what I typically do in the morning is say the market opens right here at 6:30. Let me go back to 6:30. What I look for initially is I look for the 4 hour so that I can draw the zone there. There's no lower zone here, right? So I'll typically go to the 4 hour first. I go to the 4 hour, but it wouldn't really matter. You can go from the 4 hour, you can go to the 2 hour, you can go to the 8 hour. It's just, again, it's up to your preference. For me, I like the 4 hour because it kind of gives you that sweet spot. I mean, the daily is probably going to be the best area for you to draw your zone. But so if we draw the zone over here, Alan, and you go down to the 1 minute, you got this whole area like pretty much colored in, right? So at this point, you're not really going to have, it's going to be pretty much useless at that point. Of course, the daily is going to be the best. You know, the higher time frames, the better. I think the good sweet spot is going to be in between like the 4 hour, but sometimes even the 4 hour will be like way too filled. Like, so for example, right here, say we do that right there, right? Because this is what I did this morning. I drew it before market open, and then it just ended up getting stuck in that area, right? It was just pretty much the entire zone was filled. I think what I did was I actually drew the one before it. So, I mean, I can't remember because it's like, oh, so this is what I did. I didn't actually draw this one right here, but I drew it on this one. So this was probably not the best area to draw my zone because this is what happened this morning. We pretty much had this drawn up, and then it was a good thing, but then it was also a bad thing. It was a good thing because we had like this whole zoned area here marked up, but it was a bad thing because it was kind of pointless, right? Because we had this area marked up here, but if I would have just drawn the zones on the 1 minute, I think it would have been a lot cleaner. Because this here, it works hand in hand. Like you can see the big zoned area. So I'll just show you this. So this is what we had this morning, right, Alan? But if you didn't use that 4 hour zone and you just use the 1 minute, so I'm going to draw both of them here and I'm going to put them side by side so that you can see. So if you did that and you instead did this just like versus having that big zone. So instead of having, let me just take this off real quick. So instead of having, you know, just this huge zone right here, you could have had these two small zones just from the 1 minute. And it would have made a lot more sense because you can see these bounces and you can basically trade in between this area right here, right? Which is pretty much what we did. But it's just a lot cleaner in my opinion. And then if you wanted to draw more zones, you could go over here. So it's just like, it's kind of like a trial and error type thing. You kind of want to play with it until you figure out what looks better for you. But I don't want to tell you like, hey, Alan, you for sure have to draw like the 4 hour and for sure have to draw the 1 hour. Because if you do that, it might not work for you because you might just have a big zone here and it's not going to make sense. But if you go on the 1 minute, you're going to have more exact zones on here. So I usually draw the bigger zones when they're far off, and then I draw smaller zones within it. But it probably would have made more sense for me to just do this from the get-go, right? Just drew the 1 minute because you can see how much cleaner it is here. Because in this situation, we could have just traded within this area, which we did, but it would have been easier to see. So yeah, Alan, if there's any other questions regarding that or anything, any follow-up, you know, feel free to let me know and I'll clear it up for you. But again, it's just going to be a lot of like trial and error, just figuring out what works for you. Some days the shorter time frames will work better. Some days the higher time frames will work better. It's just kind of finding that middle ground. I use both, so it's just whatever fits my criteria for the day. All right, so that's it with that question right there for Alan. We're done with the how to draw zones. The next question here is the momentum pullback scalp levels indicator. We got Kenneth over here. Kenneth's asking, what's up, bro? Check out the MPS on the 2 minute chart. Been testing it lately, and it's been hitting at a 1-to-1 at 2020. I have my own variation of it, but just curious to see and think. My entry point has been at 20 mark instead of the 10 mark. Yeah, no, definitely, Kenneth. Well, or Kenny. It's funny. Like whenever I see your name, I call you Kenneth, but we all know your name's Kenny. So, all right, Kenny. Let's take a look at that. So I'm gonna go over here to, we'll use this chart, but I'll take off the sessions because we don't really, it's not necessary. Couple other things here too would be, I guess I could leave everything else on here. Everything else is fine. So let's go back to the session this morning. I don't think there was any momentum pullback scalps that happened over here. I think the first entry that came up would have been later around 7 right here. So let me go over here real quick. And I can't remember if there was any entries today. I don't think so. Because the trend was just not that, like the market was kind of just sideways for today. You know, let's go back to like yesterday's market, because I think yesterday's market was a lot smoother. And there's just going to be better examples, of course. So for this topic right now that I'm currently covering, guys, I'm going to show you guys the momentum pullback scalp indicator. It doesn't have to be used for the momentum pullback scalp. I just called it that because that's what I created it for. But you can use it for whatever you guys want to use it for. Let's see. So the market was moving pretty decent right here. Okay, so if you guys are not familiar with the momentum pullback scalp strategy, I will put the strategy requirements on the chart. Okay, so the way that the strategy works is first you want to identify the direction of momentum. So for example, right here, we have a sell signal. You're looking for sell entries. Next, you want to confirm the direction of the trend. So you want to make sure that the trend is matching momentum. Since you have a sell momentum, you want to confirm that the trend is bearish. To do that, you'll look at the pivots over here, and you want to make sure that all pivots are below level 4. So for my colors here, level 4 is red. So basically, whenever the pivots are below level, the red pivot right here, which is level 4, this is going to confirm that the trend is bearish, right? Whenever it's the opposite, and you have all the pivots above level 4, that's going to confirm that it's bearish. So currently right here, we have a sell signal. We have all of the pivots below the red pivot, which is level 4. This is going to confirm a bearish trend. So you have bearish momentum, bearish trend. That's step 1 and 2. Step 3, you want to confirm the trend is matching using the trend meter. So looking down below here is the trend meter. Whenever it's red, it means price is bearish. Whenever it's green, it means it's bullish. Whenever it's blue, that means it's neutral. So looking at this down here, it's currently red. So step 1, we have a bearish momentum. Step 2, we have bearish trend using the pivots. Step 3, we have a bearish trend using the trend meter. Step 4, you want to confirm a directional push in that direction. So price here, you can see from this momentum signal, is pushing to the downside, right? So that's going to be step 4. Super simple. It doesn't even need to be a step, but I just put it there so people will actually look and use the checklist. Step 5, you want to confirm a pullback in the opposite direction. So once you confirm all that stuff, you see price pushes down, retraces back up right here. This is the pullback in the opposite direction. You don't really have to look for anything specific. You're just looking for a green candle. Green candle is going to confirm a pullback. Doesn't matter how big, how small the candle is, that's going to confirm a pullback. 6, you want to confirm that the pullback does not close past the momentum signal, meaning this pullback cannot go farther than this momentum signal right here, right? This pullback's way down here, so that's going to confirm the criteria. Once you confirm steps 1 through 6, step 7 is you want to enter at the nearest whole number, and that's where the momentum pullback scalp levels indicator comes into play. So once you turn the indicator on right here, you can see that it has all the levels marked up at the nearest whole number, which is at basically every 10 mark. With what Kenneth was saying over here, Kenny was saying earlier, is you can, like, he uses that at the 20 level, right? So if you want to use it at the 10 level, which is where it's supposed to be left, you can do that. If you want to do it at the 20, you can do that as well, right? It's just up to preference. So looking at this right here, at the original strategy, you want to enter at the closest, basically the nearest whole number, which is either 0, 0, 10, 20, 30, 40, 50, 60, 70, 80, 90, etc., right? Anything that is a whole number ending with a 0. So when price pulls up right here, your entry is going to happen right here at 36,130. The reason for that is because this is the nearest whole number, right? Price pulls up, What you're looking for to happen here is you're looking for price to push up further, fill your entry, come back down and hit your TP. That's exactly what you're looking for. So with that said, you would have a sell position just waiting right here, pending sell entry. The TP stop loss is set at 1025. And once this kind of pulls up even further, you can see from this candle right here, it pretty much fills it and it goes straight to TP. If you didn't get out at TP right there, the next candle right here comes back down and immediately full TP right there. So that's the momentum pullback scalp strategy. And this is how you would use the indicator to draw the lines. If you don't have this indicator, which we didn't have for the longest time, you can just draw the lines yourself. But it's a lot easier if, like, instead of having to draw these lines here, which was kind of annoying for us, this was what kind of prevented me from wanting to enter the trades. To make things simpler, which is not required, but just to make things simpler, instead of having to draw all these lines on the chart like this, all you need to do now is turn on the MPS levels indicator, and you got the lines on the chart already. You can make adjustments to it. So, like, for example, right here, I have 5 levels. If you want more levels, so for example, if I zoom out real quick, these are all the levels that pretty much, let me zoom out a little further. Well, whatever, it's price is kind of tight right here. But anyways, what I'm trying to say here is that there's like 5 levels on each side, right? So this is like the middle level. There's like 1, 2, 3, 4, 5 to the top, and then 5 to the bottom. If you want them to extend out even more, you just change the number. So if you want 6 levels to the top and 6 levels to the bottom, you type in 6. What happens? You get more levels there. Again, if you want to put more than that, say for example, you just want to trade off levels, right? Some people just like to trade off price levels, which is completely fine. If you want more levels, again, you'll just, instead of 6 here, you'll type in like 20, right? Now your whole screen is full levels. So this, like I mentioned, this indicator doesn't need to be applied with this specific strategy. You can just turn it on and then you'll have a bunch of levels on the chart. Some people want to trade off the whole levels. Like one key thing that a lot of people trade off are like the 50s and the 100s. So basically from 500 pips to 1,000 pips. If you want to do that, instead of having it at 10 right here, you just change this to 50. And now you have levels marked up at the basically the whole number, which is 36,100. And then you have another level over here at 36,150. So you guys can see how useful this indicator is, right? I don't create random indicators. Everything I create is for a reason. So like for people who want to trade levels like this, you can change the numbers to whatever you want to change them to. It's pretty much up to you. If you just want to be trading at 1,000 marks, right? Or at the 100 marks, put 100 there. Now you only have levels at the 100 mark, which makes things super easy because, like, this is typically where price will like cross and then bounce over. Some people like to trade this way. They just want to trade based off the levels, which is completely fine. Again, there's no right or wrong way to trade. And I created this indicator to be versatile so that you can change it for however you like. The thing that Kenny over here was asking was that he would trade it on a 2-minute chart. So let's go ahead and take a look at that. Again, this is like on the side, so you don't have to do this. Kenny's just asking to take a look at it and see, if I see what he sees, which I'm pretty sure we'll see. Yeah, it doesn't matter what time frame you trade on. You can trade on whatever time frame you like. You can apply the strategy on the 1 minute, 5 minute, 10 minute, 2 minute, 20 minute, 25 minute, whatever it may be. This strategy works pretty much in any way because this is like a strict price action type strategy, and this is something that Kenny likes. Kenny talked to me one time and we both kind of laughed about it because he was like, hey, this new strategy you're using, it's like pure price action. And I told him, like, any technical analysis strategy is pure price action because everything's based off how price reacts to, whatever happens in the market. So like realistically, all the strategies that we apply are all based off price action too. Even though we trade momentum, we're really taking entries off price action. So back to what Kenny was saying here, he said he traded on the 2-minute time frame. Pretty much does the same thing. Instead of using 10 mark, he uses the 20 mark. So I just changed my settings over here to 20. It makes things a whole lot easier. And he does the same thing. So right here, we have a sell signal. And then we'll just use this as an example right here. So Kenny would have taken this entry right here. Sell signal, price retraces down, price pulls up right here. You have a sell entry at this point. He said that he does 20-20 for the CP stop loss, which is pretty good. I mean, it's better than, obviously negative risk reward. So again, same thing here. Price pulls back, fills the order, comes back down. Actually, this one doesn't play through. So this one doesn't actually work. Let's look for the next one. There's no more entries here. We got price coming down a little bit. All right, here's another one. And it's all right if the strategy doesn't work immediately, right? There's going to be some bad entries or sometimes there's going to be good entries. Here's another example right here, Kenny. So we got sell signal, price pulls down, retraces up right here. Same thing again, sell entry right here. And the good thing about this is that the way that Kenny's applying it is that it's a 1-to-1 risk reward. So you can take losses. You can just eat a loss. Next trade will pretty much come back and just recoup that. So again, right here, next entries at this point. Sorry, this one also doesn't work. Let me see if I can find a better one here. If you have an example, Kenny, that you want me to look at, feel free to let me know if you have a specific time stamp that, but I just looked at two right there. They both didn't play out, unfortunately. Okay, we have a buy signal here. There's no bullish trend yet. Okay, so here's another entry right here. Same thing, right? Buy signal, bullish trend meter is green, looks good. Buy entry would happen right here. 20-20, same thing. Price comes down. So if this comes down further, it's going to fill the order, which it did. Trade is now filled. And unfortunately, this doesn't work out. I don't know if you were looking at a different date, Kenny. I just looked at over here, like the same criteria you were talking about. I mean, I just didn't see any good entries. Everything pretty much lost. So I'm not sure if there's a specific day that you looked at, but everything from yesterday pretty much lost from 6:30 up until 8, which it could be a fluke. It could just be one day where the market's like that. But for me personally, it doesn't meet my criteria. Whenever I apply strategy, it has to have like a pretty high win rate. Like I think like almost all my strategies, I never have like 2 back-to-back losses because I've done my deep testing and I kind of figured out, what's the criteria that should be used. All right, let's look for another one right here. We have price coming down, retracement right there. Next entry would happen right here. Let's see. I'm hoping this one plays through. Let's do it again. So another one right here. Entry would happen at that point at the 36,120 mark. Trade gets filled. Unfortunately, does not work out. Yeah, Kenny, I don't know. It's not really looking too good on my end. I was hoping it would work out because then it'd be something that I would use, but I looked at pretty much all the entries right here as like 4 back-to-back losses on this 2-minute time frame. I set it to 20. Yeah, if there's a specific day that you want me to look at, here, let's look at another one. I was really hoping it'd work well so we can probably test it out during the live session, but it's not working out for me here. All right, let's look again. Same thing here. Price needs to come back down. All right, let's see. All right, so we got another one here. All right, actually, maybe not. Okay, we got another one right here. I'm hoping this one's going to play through. Let me go back because it would have filled on this candle right here. Yeah, I mean, I'm assuming your criteria is a little different, Kenny, because I'm sure if you were using it, I mean, there must be something different that you're doing that works better. Okay, so we have bullish momentum, price pushes up, retraces down right here. This is where the level would be. Fills the order right there. And yes, this one looks like it finally hit. So there goes one right there, Kenny. So yeah, I mean, it looks like it works, but maybe it's like a different time in the session or maybe a different day. I don't know. See, CTO over here said, been trading on 2-minute for the past month when volatility is lower. Yeah, CT said that the New York opening is tough. After 9 to noon is better. Okay, so that makes sense. So that's exactly what happened here. This happened a little later in the session. Past 9 o'clock, played out nice right there, full TP. Let's see if we can find another one. Yeah, the only downside for this is that I don't trade that late into the session, so it wouldn't work out for me personally, but I mean, if it works out for you guys, great. Gotcha. Yeah, Kenneth said he didn't take any entries yesterday because ATR was too high. Yeah, yesterday was super high. I would agree with you too. It'd probably be a bad time to take it because it was just way too high. It's easy to get caught in, fake outs and stuff. Because that's kind of what happened here. It looks like a lot of fake outs happened, then it came back in. But it's all good. It's something that we can look at in the future, Kenny. But you do have a good idea. Obviously you have a good idea. Like, I wouldn't mind using this on different time frames. I actually look at this on the 5 minute. So, and the fact that you went to the 2 minute, it's cool because so here's the thing. Kenny went to the 2 minute. Basically, nobody trades on the 2 minute, right? So if Kenny finds a bunch of entries on the 2 minute, it's all free for his taking, right? Because nobody else is looking for these entries here. So if you guys want to try this out on different time frames, I've tried it out on the 1 minute and 5 minute. They work perfectly fine. One time frame that we used to trade a lot in the past was a 3 minute. So a 3 minute might be something that people want to play around with. But yeah, Kenny, if you find something good on the 2 minute, I mean, you got to do something different. That's typically what I tell people, right? That's why we trade differently from majority of people who trade. And that's why we're more successful than a lot of people, right? Because we typically we're looking for the outliers. We're looking for the outliers. And for me, I'm looking for outliers that are low hanging fruit. So I create my strategies differently from how other people trade. And I typically go for the low hanging fruit, which is like 100 pips or so, because I catch my profit and then I run away with it. So yeah, no, you're onto something definitely, Kenny. And I think it's something that you just have to, or that we would have to deep test a little further. And I mean, CT uses it well, and he's a seasoned trader. So, if he's using a 2 minute and you're using a 2 minute, it makes sense. So yeah, CT said the only reason he used a 2 minute is because it gives a little more time for a move to happen. Lower volatility after 8. Yeah, and I agree with you too, CT. I think once you trade after 8 o'clock, the higher time frames work better. That's why we trade only between 6:30 and 8, because that's when volatility is typically pretty high. And it makes it easy to take these 1 minute trades. So, all right. If there's anything else that you guys want me to cover regarding the momentum pullback scalp, feel free to pop into the chat. The next topic that we'll be covering is going to be the K2 trailing stop indicator. And I'll show you guys how I use it, or how I used it. It's pretty interesting. It's the same as ATR. It's just, again, I just made it a little better. All right, so I think that's it with the questions regarding the momentum pullback scalp. If you guys have any more questions, one question here from Ryan. So Ryan said, for the MPS, when you're doing a buy, do you enter on the first red candle? So let me show you an example over here, if I can find it. All right, so I think there's one that was right here. Actually, this is a levels up real quick. I'm just looking for an entry right here so I can show you an example for the buy. All right, so there's one that was over here. No, doesn't fill, doesn't fill. Let's see if I can find it. Yeah, Kenny says that's funny though. All the trades you looked at didn't play through. Yeah, I mean, it's all good, Kenny. It happens. Sometimes there's just days where you have to avoid it. Maybe that's a rule that you would focus on. Don't trade it during NFP, or don't trade it during high volatility. I mean, that's how you master a strategy, right? You just make small adjustments. Like, you already have the idea in place. Now it's just kind of fine tuning to figure out what works best. What time frames, what times to trade it. Yeah, I mean, that's how I create strategies. I create it like with a baseline, and then from there I add on other stuff. So let's go over here to Monday. I think there was more examples on Monday, right? Because it was Monday was a bullish day. Yeah, there's a ton of entries right here, I think. All right, so I mean, there should be one right here. It's kind of late in the session, but let's see. All right, so back to your question. So Ryan's asking, for the MPS, when you're doing a buy, do you enter on the first red candle? So when the first red candle comes up, so here's an example of a buy, right? Let me go and put the criteria up again. momentum pullback scalp. So first you want to identify momentum. Right here we have a bullish momentum, so that's a buy. You're obviously looking for buys here. Second, you have the confirmation of bullish trend with the pivots. You can see all the pivots are above the red one. Third, you want to see that the trend meter down here below is green or red or blue. You can see down here it's green, so everything's bullish. I just want to confirm everything step by step so that we can confirm that this is a valid entry. So once you have all that lined up right there, the next thing for you to look at would be the push in the direction. So this is a push in the direction. Step 5, look for the pullback. Pullback happens right here off the red candle. And now we have a setup, right? So the setup that we're looking at over here regarding your question, Ryan, is you're asking if you enter on the first candle. So the first red candle right here is where you place your pending order. So you don't enter right away. Well, what you'll do at this point is you'll put a buy entry right here, right? You got your buy entry just pending right there. It's just waiting. It's a pending order. If you want to enter right away, when price comes down and touches it, you could do that if you want to do it manually, but you're supposed to just put a pending order there. So like basically what you're looking for is you're waiting for this to happen. You're looking for price to come down, fill your order, and then go back up to your TP. That's pretty much it. So yes, once you see the first red candle, then you put your pending order. And once you have that, you kind of just wait for it to fill. You can see right here, it fills on the next candle. So technically I would have filled like right immediately and kind of go sideways for a bit, pulls back kind of hard, then it swings right back up, full TP. So yeah, if you want to see another example, Ryan, just let me know. Let's see, I think there's another one right here. Buy signal, nothing comes up. Buy signal, nothing comes up. Buy signal comes up right here. So let me show you one more example here. So same thing again. You have a buy signal. You got a bullish trend with the pivots, bullish trend with the trend meter. You have price push up, retrace right here. So price pushes up, retracement happens here. There's the first red candle. You do the same thing. Once you have that, you set your pending buy stop right there, or a buy limit actually. If price is above it, it'll be a buy limit order. And if price is below your entry, it's going to be a buy stop. It's just two different orders. Usually you'll get an error if you put the wrong one in, but you'll get used to it once it comes time for you to put these orders in. But so same thing again right here, same situation, same pattern. You got everything lined up there. You put your pending order. Now you're just waiting for it to come down and fill. So basically when you see this candle close, you want to have your pending order already placed right there, like just ready to go. Price comes down, fills it right there. Now it's active, kind of goes back for a little bit, pushes back up, kind of get a sideways move, and then eventually price pushes up and hit your TP right there. So, you know, just to clarify, you're not going to enter manually as soon as you see the red candle, but you're going to put your pending order to catch the entry there. Or if you're doing it manually, then you just wait for it to pull down. And then as soon as it pulls down, you just hit buy and then ready to go. But you're really just looking at this price point right here, which should be the closest whole number. So yeah, Ryan, if there's any other questions regarding that, you know, let me know. If there's any other questions regarding the momentum pullback scalp, let me know, guys, before we move on to the next topic, which will be the trailing stop indicator. Yeah, no problem, Ryan. CT is asking, changing too many variables is tough to track. Make small changes, just 1 to 2 minutes, leave everything else the same. Yeah, and I agree with you too, CT, 100%. All right, so now we're going to move on to the trailing stop indicator. Just turn it back on. All right, let me turn everything else off over here and I'll show you what this trailing stop indicator does. I'll turn off all the other indicators. Basically what this indicator does, it just kind of shows you, it gives you an idea where to place your stop loss. So let's see, I know there's no entry here, but we'll just use this for example. I'm looking for an example of an entry here because it can be any strategy. It doesn't have to be anything specific. But here, let me see if I can turn on the momentum. Okay, so here's an example right here. I know there's no strategy here, but I mean, if you were to do like say an intraday scalp, you can see we have a buy signal here. We have a trend meter, which is green. If I turn on the pivots are shifting to an upside. So This could be considered a pivot scalp entry. It could be considered an intraday scalp entry. But this is how the indicator would work. So the trailing stop indicator, what it does is it basically shows you where your stop loss should be based off the ATR. The ATR right here is 10. So if you measure it from like this the top of the candle up until like the bottom, you can see that it's kind of like the ATR is actually 34, or actually the ATR is 10, but the trailing stop is at 34. It's at a multiple. So like basically for this specific candle right here, I've set it to where, or for this indicator, I've set it to where there's some cushion. Because if you put your stop loss too close at like 10 points, odds of you getting stopped out are very likely, right? It's too close. So what this indicator does is, say, for example, you wanted to enter a trade here, right, for a buy. What you do from there is you can put your stop loss at the trailing stop, which is 34. And if you want to go for a 1-to-1, you can do that. If you want to do a 1-to-1 type entry, do 34, right? Now, here's where the fun part comes in, where like this like comes into play. What you do at this point now is your stop loss is going to be at this line, right? So if you want to just trail your entry, like if you don't want to get in and out of these entries too quickly, this is where you can really capitalize on holding on to the position longer than you typically would. So let me just move it up a little bit. See how this green line right here is following it? When this green line moves up, you move your stop loss in profit with the trailing stop indicator. I created this indicator because I was going to automate a strategy very similar to this, basically, where it would just trail it. So you can see how this goes up higher. As it goes higher and higher, you just move your stop loss closer and closer up, right? And you see how it just keeps moving up higher. So what you do here is you never pull it back lower. When it goes up, you just continue moving it up. And even if this green line here pulls back a little bit, you just leave it where it is. And when that green line comes back, you pull it up higher. Goes up higher right here. At this point, you're at break even. So if you went for a 1-to-1, you would have already hit your TP for 34. If you wanted to go for like basically no ceiling, and you just keep climbing it up, your stop loss is now in profit right here at the green line. And it keeps going higher. You move it higher up here. And if it keeps going higher, you move it higher right here. I'll just keep moving this over. And if it goes higher, you just keep moving it higher until it comes down and it stops you out, right? In profit. Keeps going higher. Stop loss is now right there. Keeps going higher. So you can hold on to this position pretty much all day. All you're doing is moving your stop loss higher and higher. Right? Now you're still in the position. There's still no stop. There's no TP. At this point, you're just pretty much riding it further. Okay, so this is where it comes back down. At this point right here, your stop loss is at this point, at that high point. And then when it finally pulls down right here, you get stopped out in profit, right? So instead of getting out at 34 points, which I'd be personally fine with, 34 points is great for me. It's like 340 pips. Instead of getting out right here, you would have gone out right here at 66. So you can see like this makes things a lot more. It depends on the trader. For me, I'm not this type of trader, so I don't like to trade this way. It's just too much work for me, right? I don't want to be looking at the chart every couple minutes and like, okay, do I got to move my stop loss up higher? But there's a couple people in the group who like to trade this way. If you want to just buy and hold it and pretty much just ride this thing up, you can do that. The thing with this strategy is that you have to be okay with losing, right? Because you're not going to have these big streaks every single day. You're going to have a bunch of losses until you finally get that big streak, and it's gonna pay out, right? And it works the same with whatever time frame you want to trade on. If you want to trade on the 1 minute, it works on the 1 minute. If you want to trade on the 1 hour, it's the same thing, right? Say the same thing happens over here, right at this low point. Right, same thing again right here. You have a buy signal, trend meter is green. If you want to take the buy right here, do the same thing. Your stop loss is like right there, 208 points. That's 2,000 pips. But this becomes more of a swing trade type strategy. Right, price climbs up. Your stop loss trails it. Keeps trailing it right there. Hasn't gone up any higher yet. Now your stop loss is in profit. You got no TP. follows it right there, keeps climbing, keeps climbing. See, this is a huge move right here. You could have held on to this trade for it. This becomes a swing trade, and you hold on to it for like forever, basically, until it comes back down and stops you out. Okay, so right here it comes down, finally stops you out right there. What happens at this point? You would have held on to this trade from whatever time this is, 7 o'clock in the morning, up until you hold on to it for about 2 days, right? 2 to 4 days. At that point, you would have locked in 4,870 pips. So if you want to be a swing trader, this is perfect for you because you can just take the trade, let the trade run, and then all you do is check on your chart like every couple hours, like, all right, I got to move my stop loss and profit. And this is the strategy that I was going to be applying. So I was going to be doing this with a hedge fund account that I was trading, or that I was going to be trading with. But then I was like, there's so much money in this strategy. Why would I want to sell this to somebody, right? So I was like, nah, there's no point. There's no need for me to go and sell this strategy to somebody because I can just use it myself and I can make 10 times as much as I would make trading a hedge fund. So yeah, again, this is something that has a work in progress. I'm probably going to be trying to automate this somehow. And then maybe at some point in the future, when I have my own hedge fund, I'll just have this for account management, right? We'll have people who want to invest, and I'll just have this strategy run up pretty much every day. It's going to have a bunch of losses, but once you have these big wins, you know, it's going to pay out. So yeah, like whenever I come up with new stuff, I always like think like, is this something I want to share with you guys, right? Because like, it's like, why would I want to share this stuff with like people? But then again, I like sharing with you guys because it forces me to work on it. Because if I don't share with people, it doesn't really get me excited. So like right here, I showed you guys this, and I'm pretty sure it gets some of you guys excited, and it gets me excited too. Because I'm like, there's a ton of money that could be made applying this type of strategy. It's super simple. It just requires work. And that's the stuff that I'm not trying to do. Like I'm trying to do the least amount of work as possible. Like if you guys know me personally, you guys know I'm super lazy. Like when it comes to work, I don't even work, right? I hang out with you guys every day, but when I have like one little email that I have to respond to, it'll like take me like a week to respond to it because I don't want to do any work. So yeah, I mean, this is kind of what's in store in the future. This is something like, you know, when I do have my own hedge fund or my own account management service or something like that, I'll be trading a lot of these swing type strategies because they don't require as much work. I just need to figure out how to code this into something where I can do it automatically for me because I don't want to be on my computer at all. Like even right now, I don't want to be on my computer at all, but I'm here mentoring you guys because it's helpful for both of us. It's helpful for me because it reminds me, where it helps me refresh on a lot of older strategies. And it also helps me teach you guys because you guys want to learn, of course. So yeah, this is kind of what's in store. This indicator, again, I still have some bugs that I have to fix, but eventually, I mean, I could show you all these entries here. There's like one entry here. The way that I would apply the strategy is I would enter at the lowest point, right? So like, for example, this strategy actually, or this entry would have actually happened like way down here or even lower. Yeah, no, it actually would have started right here. So like if I was to apply this strategy, or actually, no, I take that back. It would have gone stopped out right here for a small loss. So if you took this one right here, it would have gone stopped out right here for a small loss. Taking this one right here, stopped out right here for a small loss. But if you kept going, this one right here would have been the big win. This big move right here. Or technically you could have gotten in from right here too. So there's another entry that would have happened right here. And it looks like this one would have gone knocked out in profit. So this is why I want to automate it, because I don't want to be at the computer checking this like every single day. So this one would have gotten knocked out right here, which would have still been a good profit. This trade would have ran for about let's see. So this trade ran from November 21st up until 5 days. So this trade would have ran for 5 days, would have gone stopped out in profit over here for 1,550 pips, which is solid. You know, this is a pretty good return. You make like 1,000, like over 1,000 pips here, small losses right here. So this would have been a loss And this loss here would have been very minimal. Would have been like a negative 400 pips. And then, yeah, I mean, that's about it. So this one right here would be the only loss. So you'd make 1,500 pips here. You'd lose 400 pips here. You make a big win over here for about 5,000 pips almost. So yeah, it's something I'm working on. You know, whenever I put this stuff together, I try to figure out ways to improve or improvise on what needs to be done. So yeah, in the future, I'll probably go into swing trading just for like my hedge accounts and stuff like that, so that I can just kind of let the trades run. But yeah, this will probably be available to you guys hopefully by the end of the week. If not by the end of the week, hopefully by next week. It's just a lot of work for me to like recreate these videos and make adjustments to these indicators so that you guys can see things without having any issues. But yeah, for the most part, the strategy is pretty cool, or this thing in general is just pretty cool in general. So another entry right here, you don't got stopped out right here, small profit. Another entry right here, this probably would have gone stopped out for a small loss. Another entry right there. Again, small loss. So the entries don't come up very often. But if I was to run this, I probably would run this on multiple assets. I'd run it on US 30. I'd run it on NASDAQ. Another entry here. Run it on S&P. Yeah, it looks like there's an entry that would have ran right here too. Run it on gold. Pretty much all the big name like assets. Whatever has volatility. So this right here is a buy signal. Would have taken that for a buy. Would have gone stopped out right here for a small profit. Could have maybe taken this sell. Yeah, this sell right here would have rode down. Huge profit right there. If you took the sell here, trading gold, this thing would have gone stopped out right here in profit at 500 points. I don't trade gold, but I think 500 points is a lot. Worth a lot because gold is kind of expensive to trade. So, all right, guys, I think that's it for this indicator. If there's any other questions regarding that, you know, feel free to let me know. Otherwise, let's continue on with our session. Crap, don't tell me I deleted that thing. Oh man, I deleted a list of things that we were going to cover. It's okay. Let me just rewind here. I'm going to do this. Actually, I don't know if I can rewind the replay. I was going to rewind the replay from today, but I don't think it's ready yet. Actually, no, I could. All right, I got it right here. Yeah, let me just make another one. Should save it somewhere so I don't do that again. All right, but yeah, if there's any other questions regarding this indicator, guys, let me know. You guys probably don't have questions yet because you guys don't have it, but hopefully I'll get it out to you guys pretty soon so that you guys can start playing with it. And then when you guys play with it, it'll help me come up with ideas to make things better. Okay, so today's entering session topics. So we already covered how to draw zones using tool. MPS momentum, pullback scalp indicator, K2 trailing stop indicator, breakout V3 and breakout V3 continuation. High-low scalp V2 and the news correction strategy. All right, guys, so here's a list of everything covering over here. Oh, thanks, Mamal. Yeah, Mamal said I probably had it copied in my clipboard, but it's okay. Typed it up already. Barack is asking, are you planning on incorporating it into the existing package or will it be separate? What are you referring to, Barack? Sorry, I'm just kind of confused about what you're asking about. I know you're on the YouTube, so it's a little delayed. You might just be hearing this stuff later. If you're talking about the trailing stop indicator, it's going to be included with all the indicators. So if that's your question, then yes, it'll be included with the existing indicator package. But if you're referring to something else, if you can clarify. All right, so let's get back to the fun stuff. Let's get back to the breakout V3. So the breakout V3, gotcha, yeah. So Brock, yeah, it'll be included with the indicators. It's not separate. So if you have access to the indicators, you'll have access to the trailing stop indicator, which I think you'll like to use too, Brock, because I know that you like to take trades with no stop loss, right? So again, if you want to take this with no stop loss, you can kind of just hold it down. Or you can hold it and it'll hang on to the trade longer than usual. That's one thing that I noticed too. If you use it without a stop loss and you just trail it, it's just crazy how useful it is. All right, so let me see. I forgot how oh, there we go. Take this thing off. Alan is asking, is the new ATR something separate? No, it's part of the indicator right here, Alan. So all I did was I took off the trailing stop and stuff. So the indicator typically has all this stuff on here. All I do is I go to the settings and then I just take off this so it doesn't show on the chart. It's still on there, but it doesn't show. And then you have the option down here to change your area of where you want your ATR. So the ATR is typically right there. You can change the location. If you want it on top, you can put it on top. If you want it on the right side, you can put on the right side. If you want it on the bottom right, you can put it on the bottom right. So there's different areas to put it in. I just like having it down the middle, but it's going to be part of the trailing stop indicator because the ATR is what it's based off. So that's why the ATR is down there to begin with. All right. Yeah, exactly. Brock said you could trail it with CTrader. Yeah, exactly. Super simple to use. And I think it'll be super helpful for a lot of you guys. Anyways, let's cover the breakout V3. So I don't think the entry came up today, or it did come up, but it wasn't a good entry because of the market conditions. Yeah, because I think the entry came up right here, but I remember that it was at a bunch of like red flags, right? That was one of the things. Yeah, because it didn't play out. So let's start off with the breakout 3 continuation, because those are the entries that we actually took today. We took a bunch of these entries today and they played out perfect. So I'll go over the continuation, which is the same thing as the breakout V3. The only difference is the TP stop loss. So let's go over this first. The first entry happened, I believe. Well, there was a bunch of entries actually. There's one right here, I think, that came up. So let me just go to this one right here. So I'll just let's call it the breakout V3. Breakout V3 continuation. Because it's the same strategy. The only difference is the TP stop loss is different. Continuation. So first you want to confirm, and this strategy, it's still a work in progress. So I probably won't create a video for this yet. I'm still not sure if I want to use valid signals or invalid. It's kind of different. Like for the breakout V3, I typically don't matter. I don't care if it's valid or invalid, but for the continuation, I usually do care. So we're just going to put this to confirm momentum signal. I'm not going to put valid or invalid because we're just going to leave it at that. If we need to make changes along the way, we'll make changes. But right now, it's just any momentum signal. So first, confirm momentum signal. 2, you're going to confirm following candle, same color as momentum. Then and then for here, enter on the open of the following candle. TP stop loss 30-30 or 10-30 or continuation. Yeah, that's pretty much it. Save this as, yeah, I mean, the strategy is super, super simple. It's not really anything crazy. So I'll show you first an example of a breakout V3 continuation. So for example, right here, we have a buy signal. That's going to be step one, confirm momentum signal. Doesn't matter if it's buy or sell. You're going to confirm that. Second, you want to confirm the following candle is the same color as momentum. So right here, we have a buy signal. The next candle is green. Once you have that set up, you're going to put your TP stop loss right there. You can probably use a tighter TP stop loss, but you know, just for the fact of their kind of random volatility, I keep it to 1030, but you can probably use like a 1015. Like some people use a 1015, some people use a 1010, some people use a 1020. It's just up to preference. Again, it's a work in progress, so maybe we can make adjustments as time goes along, but right now we're going to keep it at 1030. So with that said, this is the breakout V3 continuation. It's the same thing as a breakout V3. However, the breakout, and I got it now that I just remembered. So I'll put it under the notes. I'm going to take it. Breakout V3 is once a day, first entry. Breakout V3 continuation. Okay, so I just put that there. I mean, you don't have to follow this, but it's kind of what's recommended for. I mean, it's just really up to you guys' preference again. Like I'll give you guys criteria, but again, it's gonna be up to your preference. The only reason I'm saying this is because we would have been done with this live session, you know, by 8 o'clock. So this entry came up at 8:10, right? Sorry, 8:01. But you can see that it still works. Like we typically would be done trading at this time because, you know, I'm usually done around like 7:50 around there. But this entry came up after at 8 o'clock. So if you wanted to keep trading after 8, this entry would have came up. You can see it's a little more choppy. Kind of pulls back into drawdown a little bit, but eventually it climbs up and hits TP. So this is why I typically don't trade it like after the live session, because the volatility is a little lower and you start to get some sideways movement, but you can see here that it still works fine. So if you guys want to do it after the live session, it's really up to you. I'm not going to do it, but for my testing, it works whenever the market's volatile. So basically between 6:30 and 12. So yeah, this is going to be the breakout V3 continuation. Let's find another example over here. So with the sell signal right here, I'm going to show you an example of what would not be an entry. Let me copy this real quick and paste it over here just in case I deleted it again on accident. All right, so confirm momentum signal. We have a sell signal right here. Confirm the following candle is the same color. This candle right here is green. Doesn't meet criteria, right? So with that said, there's no entry here. Moving on to the previous one right here. Same thing. Confirm momentum signal. We have a buy signal here. The following candle behind it or in front of it is green. So this meets criteria. You enter on the close of the following candle or the open of the following candle, which should be right there. TP stop loss again is 1030. You have that set up right there. You let the trade run. Full TP right there. We actually took this one during the live session. So this is one that we took. Let's see, Alan is asking V3, you don't use trend meter at all? No, if it's not in the requirements, you don't use it. So just keep that in mind, guys. If it's not in the requirements, it's not necessary. You can use it if you want, but it's not part of the requirement, so it's not necessary. You know, again, like I mentioned earlier today, guys, when I create a strategy, I keep it pretty raw. I keep it as least amount of requirements as possible. And then in the future, if I need to add the trend meter, then, you know, maybe I'll add it on there. But right now, it's not added. So whatever is required is going to be right within the criteria. If it doesn't say anything about trend, then you just follow basic momentum. Even though trend would be useful, you would probably miss a lot of entries if you were to do that. So for example, here, there's a buy entry comes through, sell entry comes through. If you only took one, you'd be short a trade, right? And the reason why we do this is because this trade is basically, it's a breakout. So the breakout type entries are supposed to happen very quickly. And that's kind of what happens here. Price just breaks out in that direction. So you don't really need to confirm a confluence with trend. However, you can if you want, but it's not necessary. So yeah, trend meter is not required. There goes an example of the buy. And then here's the sell entry that we took today as well. We took both of them. Or actually, yeah, right here. So same thing, confirm momentum. We have a sell signal, confirm the following candle is the same color, it's red. Enter on the open of the following candle, which would be right here. Same thing, TP stop loss sets at 10:30. Let the trade run. Fills right there, kind of retraces a little bit. Pull TP. And then another one right here, right before it. Same thing. So you can see there's like 4 back-to-back wins right there. That's like 400 pips right there, easy. Same thing, buy signal, green candle. Everything lines up. Let the trade run, full TP. This right here would have been the actual breakout V3. The reason why we didn't take this trade was, if you guys remember from the live session, I kind of mentioned that there was a bunch of red flags right here. There's a bunch of sessions. If I turn on the sessions indicator, you can see right there, it just wasn't a good area to trade in. So I didn't personally want to take it. And, those red flags are there for a reason. So there's going to be different outliers where you're going to look at things when you're going to think whether you want to take the trade or not. Since I'll be on the live session with you guys, I'll usually give you a breakdown and a rundown as to like why to take a trade or why not to take a trade. This isn't as obvious to a lot of people, but it's obvious to me. So that's why I didn't take the trade here for the sell, and I avoided this possible loss. So let's go back to the previous day, because I think there was a V3, like an actual breakout V3 that happened yesterday. And we'll see if we can show you an example of that. So the 5th over here. All right, so Samsung is asking, when would you not take the breakout V3 continuation? Typically when it's at red flags. I should probably add that to here. I'll just add it to the notes. So avoid, because that's typically what I look for. Avoid entries when price is near red flags. Manipulative areas, which is the same thing, it's red flags. So yeah, I mean, it's kind of obvious, but then it kind of isn't, because I mean, you should always avoid trades when they're on a lot of red flags, but that's pretty much where I would avoid. It's basically where the red flags are. So like, for example, today I avoided it because it was at a bunch of red flags, which was the sessions, and there was news price down there. So that's why I would have avoided it there. Another thing would be probably if the candle's too large, but we've noticed that in the past, it doesn't really matter. Like, for example, I think the entry that came up over here was a huge candle and didn't really matter. It ended up playing right through. So looking at, let me go to this right here. So this was the entry from Tuesday. It was a breakout V3. This candle was huge. I personally would avoid this entry here, but I mean, some people have taken, I think a lot of people actually took this trade here. So this candle is pretty huge, as you can see. But again, like I mentioned, some people don't care. They'll see the big candle there and they'll be like, okay, this is a V3. I'll take it anyways. So for me personally, I would have avoided this trade. I can't remember if there was red flags down here or not, but here's the entry. So looking back at the criteria. So first, confirm a momentum signal, right? We have a sell signal right here. Second, confirm the following candle is the same color as momentum. We have a red candle right here. Candle is huge, but it meets criteria. So you would enter right here. The difference between the normal breakout V3 and the continuation is a TP stop loss. So for the normal V3 variation, you have this set to 30-30. So it's a 1-to-1, 300 pip TP stop loss. And for this, that's a trade that would run. So right here, the trade would have filled. And you can see right there, it went straight to TP. So I mean, it's just up to it's up to the person, right? If the person feels that they want to take a risky trade, they can take it. It's a 1-to-1 risk reward, so most of the time it's going to hit. From my testing, this strategy's been hitting pretty often. It just depends on like the market conditions for the day. I can't remember what was happening this morning, yesterday, but you can see here that it works out perfectly. So this would be a normal V3 breakout. The continuation, the only difference is a TP stop loss. Instead of going for 30-30, you're going for 10-30 because it's a continuation. You're not looking for like a big push. You're just looking for a small little breakout in the direction of momentum. So there goes an example of the original breakout. And we'll see if there's any more examples here. Here's another one right here. So this is a continuation. We had the original breakout right here, and then we have a continuation right here. A buy signal followed by a green candle. You enter that there for a buy. Again, right here, the TP stop loss is the only thing that's different. We change it to a 10-30 split, let the trade run, kind of pulls back a little bit, returns back up, goes straight to full TP right there. So that would have been 2 back-to-back breakout V3 entries. Breakout V3 and the continuation right after. I think there's another one here. No. Another one right here. So again, same thing. I think these are the entries that I took yesterday. So there's 2 buy entries. There's another one right here, buy signal, green candle right after. So the way that this kind of works, like the way that I identified this strategy was identifying supply and demand. So I don't trade supply and demand, but I notice how a lot of people like to identify supply and demand. They would typically look for a low, right? So that this point right here is a low. And then when you get a supply getting established, it pretty much breaks out from that point, right? And that's kind of where I came up with this idea. Because I'm like, okay, there's a low right here. It's a buy signal. This is like for sure going to climb up at least a little bit, at least 100 pips. So I basically use different concepts from like what other people apply. I don't trade supply and demand, but I know how to identify it. And I use my momentum here as a confluence. Because the thing is, you can trade at these lows, but the odds of you getting caught in a fake out are very likely. It's like taking a V3 variation or a V1 variation, right? There's a double body rejection right here. And I'm pretty sure there's a low right there. So this here is actually a V1 variation. The only problem is that you'll get caught in a fake out. Like for example, right here, see how price comes down? There's a V1 variation right here, but it fakes out super hard. And then it comes back for the actual direction. So the way that I came up with this strategy is I'm basically identifying supply and demand before people even identify it. Because people typically will look for supply and demand and they'll look for the touch to come like a lot later, right? So they don't actually catch supply and demand until it retests the area. For me, I'm catching supply and demand when it happens. So I'm looking for the supply down here already, or the demand, whatever it is. I don't trade it, so I don't know what's considered supply and what's demand. But it's basically I'm catching the supply or the demand as it's established. Same with this right here, right? You have the high point right here, and you have price coming down, sell signal, right candle. You basically catch the demand or whatever it is, supply demand, before it actually is established. So people don't identify this as supply and demand until later. Right? Like people see it happen and they're like, oh yeah, this is a supply, right? That's typically what people do. They'll see the supply right there and like, okay, there's a supply at this point. I'm like 2 or 3 steps ahead of those people, right? Because by the time they establish this as a supply or demand or whatever it is, I'm already identifying it right here. Like I've already identified, I know where it's at. So if you want to use this, as this could be a tool for you too. If you see these entries come up, you can use that to confirm it as a supply and demand, right? Like you can use this. So for example, you took the breakout V3 right here, right? You already know this is a breakout V3. You already know this is a supply demand. When price comes back up for the retest, this is like a double whammy for you because you get first. It's like a gold mine now that I think of it. I should probably use this myself. So you got the breakout V3 right here. You got your full TP, 300 pips. You got your breakout V3 continuation right here, another full TP. You got price coming up right here. And you're like, oh, this is a supply. Like you're like, damn, I got like all these entries lined up for me. You got another supply right there. You could enter another short. Like there's so many different ways that you guys can use these tools to apply whatever strategy you want to apply. Again, right here, if you want to do this as supply and demand, you go again for the climb back down, right? You have your entry right there kind of set up. And then you can kind of just go back to fill this gap right here at the 700 mark. Yeah, that's crazy, man. I'm like getting ideas now, because I'm like, I didn't think to do this, but now that I have this here, I'm like, I could use this to identify supply and demand with the breakout. Or if I'm too scared to take the breakout, like say I'm chicken, right? And I don't want to take the breakout, I'm scared. All right, whatever. I'm not going to take that trade, but I'm going to identify this as a supply and demand. So when price does come back up, I can use that to fill the gap. And then again, right here, I'm like, all right, I already made my profit there. I got another breakout continuation V3 right here. And I'm also going to take that. And I would have made a boatload of money right here, right? Because I could have taken the breakout V3. If I got too scared, I'm like, all right, whatever, I'll take the breakout V3 continuation. And then when price comes back to the supply and demand zone, it's, it's pretty much straight through. So that's crazy. Now that I'm thinking about it, I'm like, man, there's so much opportunity to make even more money here. I didn't even think about it. This might be another strategy right here. And you can see here that we build off everything, right? So like we have one strategy, which was like a breakout, and then it built off, okay, identifying supply and demand, and then it built off entering off the zone there. And then, yeah, I mean, fills the gap. And then this kind of fills in with like other strategies too. There's just a ton of different things here that I can use this for. Okay, well, let me put that in my notes actually. All right, so use breakout B3 to identify valid supply and demand zones. Enter off supply and demand rejection to fill any imbalance. Yeah, that's solid. All right, so I'm pretty satisfied with that there. I'm glad that I saw that. Maybe we'll have another strategy that I can come up with at some point. I'm always coming up with new stuff. This here, and now I'm super curious. Let me go to Monday. Sorry guys, let me just go to Monday. I'm curious because we had a breakout V3 on Monday. And I want to see if it works the same way. I'm super curious. Yeah, exactly. Brock says you end up seeing what else has been happening. Yeah, because we're focused on like one thing, but there's like a lot of things that are actually happening on the chart. Exactly. So let's see. Okay, 6:30. So the breakout V3 came up on Monday. Yeah, it was a pretty crazy. It's right there. So there goes the breakout V3. Obviously it hit. So again, this is another example of the breakout V3. It's kind of a crazy entry on Monday. I for sure wouldn't have taken this because the candle is just extremely large, but it played out perfect. So there's actually 3 breakouts on the same entry right here. The breakout V1 happened right here. The breakout V2 happened after 2 candles because it's just same thing. It's just 2 candles after. And this would be the breakout V3. So the breakout V3 happened right here. TP stop loss 300, 300. Okay, now I'm kind of curious because this would be considered the support. Or not supported, the supply and demand, whatever it is. I don't know if price ever came back down this low though. Let's see. It didn't, yeah. So at that point, sometimes it pushes out too far and then you just won't have the entry. But I mean, it got close to it. Yeah, it was too late. But you guys can see my idea right here, right? If this would have came back down to this area, that'd be a crazy move. Because you could have entered from right here whenever it came down to that point, and you could have rolled it back up to this, basically this higher high or close to it for like 1,800 pips or something like that. I think that's a little too far of a push. I probably would cut it off at like 1,500 or even less, maybe to like these levels right here. Go for like 1,000 pips. But you guys can kind of see my idea there. It's yeah, the market never came back down to fill. Would have been nice though. Yeah. All right. So yeah, Samsung said that large candle was news. I think there was pre-market news, right? It happened super early in the morning. Yeah, so I obviously would have skipped the entry there. But yeah, here's the example there. If you guys ever want to go and test that, feel free. I know some of you guys like to trade supply and demand, so there goes your golden egg right there to pretty much make you a ton of money identifying proper supply and demand. Because supply and demand is so subjective. I mean, there's a lot of different ways to identify it, but I think if you use it with the V3, the breakout, it kind of gives you like a really strong zoned area. So if you guys want to play around with it, feel free. Let's see. Kenny said it would be cool if the momentum indicator had a crossing oscillator to help anticipate when it's going to come up. So it actually did before. Yeah, I don't have it. I took it off because a lot of people would ask so many questions about it, and it just became such a hassle teaching people or explaining to people what it was, Kenny. But we did have that before. It wasn't really an oscillator, but it was like lines on the chart. Like you can kind of see when they cross over, they were super tight, and they would also make the chart look super messy. So, so the reason why we took it off is because it would mess up the candle. Sometimes the candles would show up super small, and it would kind of screw up our zoom in, zoom out function. So we actually did have something like that before. Let me see if I still have it here under my original indicators. No, actually, it's been updated. Yeah, unfortunately, we updated it, but we did have something like that where you can anticipate the momentum. I mean, the only other way to really anticipate it is to follow the chart, and what you can do too. So here's one thing that we used to do before, Kenny, is you can set an alert. So I mean, obviously not right now, but let's copy this. So you can set an alert where so you can turn this to momentum, and it can alert like when it comes up, even if it's hasn't closed yet. So what we used to do here is signal fired, and then you have once per bar. So whenever the candle comes up, you could set alert message here like momentum signal pending, and that's what we used to do. We'd put like momentum signal pending, and then when the momentum signal would come up, it would alert you. And then you can kind of anticipate it, because once you have that momentum come up, then you can look at the chart and you're like, okay, I'm going to wait for this to actually close. If it closes, then great, I'll take an entry. And that's how we would have it before. I think this is actually better because the oscillators before, they would just cross over too often. So this is actually better. So yeah, once you have the indicators again in the future, Kenny, if you want to do that, you can just set it up for the momentum indicator, and you can do it on any time frame. You don't have to do it on the 1 minute. Like if you want to trade on the 1 hour, like we were doing earlier for the examples, you can do it on the 1 hour. And then every time a momentum signal comes up, you can check, and then you can do that trailing stop type entry that we were discussing earlier this session. Yeah, exactly. Parag said it's the beauty of revisiting strategies. Yeah, same. I agree with you because don't tell me I deleted it again. Actually, I still have it here. There we go. All right, so I think we're done with that. Let me see. CT said the second retest of supplies, the second trade, tons of entries, taking profits on the imbalance created, then again on resupply. Yeah, no, and I agree with you too, CT. That's usually how people trade supply and demand. But I think it's even better if you're able to identify it before it even comes up using the breakout V3 or even the continuation in some instances. All right, so other than that, guys, let me move on to the next topic here. So next topic is the high-low scalp V2. Yeah, no, I saw your markup, CT. It definitely has been hitting lately. I've seen a lot of people make a ton of profit off it. So let's cover the high-low scalp V2 strategy, guys. Let me see if there was any entries today that I could see personally. Let's see. Let's go to 12. On the pivots. All right, so there's one that happened right here at like 10:26. All right, let me zoom in a little bit. Actually, I don't know if this is an entry I would have taken. We'll just use this as an example, or let me see if I can find a better one. I don't think there were really too many entries that came up today because there wasn't really much of a trend, or not a good trend at least. Nothing there. Yeah, this is an example, but it's not a great example. Let's go back to the market yesterday. Let's go to Tuesday, 12 o'clock. I don't even know if we have any entries on this day, but I guess we can check. Market just wasn't trending very well. So for this one specifically, we don't need the momentum indicator. Yeah, there just wasn't really much of a, because you have to take these entries when the trend's already established, but you can see over here just by looking at the pivots, the trends weren't really established very much. And I'll show you examples when to avoid the entries as well. There's a lot of like examples here not to take the entries, but I'm trying to find one where I can show you the actual entry. Okay, so I'll come back to these days to show you guys entries to avoid. I'll come back to Tuesday because there's a bunch of it. I mean, there's actually some good examples over here. Actually, okay, so there's an entry right here. Let me see, let me measure real quick. Price breaks below, breaks above, comes back below, comes back up. Okay, so I'm going to show you an example here. It's not going to be a good trade because this is going to be an example of like a trade to avoid, but I'm going to show you like how the entry comes. Actually, I take that back. The pivots over here didn't even confirm, so there's actually no entry there. But look here, I'm going to show you an example. So basically, whenever you get a setup for it, and most of you guys know the strategy already, I'm just going to show you an example here. This is for Randy as well, because he's asking for, some of you guys asked like when not to take the high-low scalp V2s. And this is a perfect example right here. So if you look at where like all the zones are at this point, you guys can see that there's a lot of lines, right? So for example, this candle broke and closed past it, but it broke past like so many lower highs right here. It's pretty obvious already that price is going sideways, but some people won't be able to easily identify that. One way to identify it is to see how many higher highs or higher lows or any high lows are in one area. If you have like more than 2 or 3, then at that point, it's probably going to be not a good entry because price is just going sideways. You just look at this right here. There's a bunch that are right next to each other. There's 3 that are next to each other, and there's 3 that are next to each other right here, right? This is a pretty clear example. Like, okay, price is going sideways. I should not take this trade. And here's an example why, because when price did break past this area, broke past it, came back down, it climbed back up right here, and it doesn't end up playing through. So your entry would have happened right here. You'd had a 30-30 split. The ATR is super low at 11, so you definitely shouldn't have been looking for any entries here to begin with. And you can see price go sideways for a long time before it comes down and stops you out. So Here's an example of a high-low scalp V2 to avoid whenever there's a lot of high lows in one area, because you're just going to get caught in this trap right here. Let me go a little farther back to Monday. Maybe there's some entries on Monday. Okay, so here's the market on Monday. Let me see if there was any entries here that we could have taken. Again, here you can see that the market is very choppy, and it's pretty clear because you guys can see how many high lows are like in one area, right? So again, this is another day not to take the specific entry for high-low scalp V2s. I mean, especially right here, you wouldn't, because it's just a sideways market. Let me look earlier in the session, like during our live session times, because it's typically where the market is still pretty volatile. Let's see, so price broke right here. I don't think it ever comes back down. Broke below, came back up. Okay, so here is an example of a high-low scalp V2. This is one that's like a little tricky, but it's one that I would maybe take because there's only 2 highs and 2 lows here. So there's 2 right there, and there's 2 right there, right? This is starting to go into a sideways market, but it's not super bad yet. When it gets super bad, it's when there's like 3 right here. So this one wouldn't count because this is the actual candle that's like, I guess, breaking past the structure. So you wouldn't even count this one here. You just count the ones before it. So let me put up the criteria for the high-low scalp V2. High-low scalp V2. Okay, so let's look at the criteria. So first, you want to confirm the trend using the pivots. You want to make sure that all the pivots are below level 4 or above level 4. So level 4 here is going to be the red pivot. Looking at this here, you can see that we have pivots. Well, basically all the pivots are below the red one, which is level 4. So whenever all the pivots are below level 4, it's bearish. Whenever all the pivots are above, it's bullish, right? So looking at this over here, you can see all the pivots are below level 4, which is going to confirm a bearish trend. Once you confirm the bearish trend right there, you next want to confirm a price breaking close past the nearest high low in the direction of the trend. So looking at this here, we have 1 high low right there, and we have 1 high low right there, right? You're going to confirm the one nearest in the direction of the trend. So with price right here pushing up or pushing down, see how price broke past it. Now you're looking for price to fake out. So you're looking for price to swing back up. And you would use this lower level right here. You wouldn't use this higher level. You would use this lower level right here because this is the nearest one to current price. So price right here broke below. Now you're looking for it to swing back up. Right here, it swings back up. You want to make sure that this all happens within 5 candles. So price broke below right here, 1, 2, 3, 4. This is the 4th candle right here. Now at this point, you're going to put a pending sell order at the high-low level. Right there, your TP stop loss is set to 300, 300. You have everything lined up right there. Trade kind of goes sideways for a bit, pulls back, comes back down, comes down, and hits TP right there. So there goes an example of a high-low scalp, V2. You're basically just looking for price and break and close past the structure, looking for the fake out, and then looking for the correction for your entry. So the trade would have filled right there, and then when it came down, it hit TP. If there's any questions regarding this, guys, feel free to put them in the chat. Otherwise, I'll try to show you guys another example. But this is pretty much an example of like the type of entry you'd be looking for. There's another one right here. Actually, it's not a clean entry because the trend has not confirmed yet, but technically this would probably kind of be like the same. It just would have happened like super late, like a little too late. So here's another example of a high-low scalp V2. Confirm the trend, it's bullish. Confirm price break and close past structure. It happened right here. And this is actually a better entry because you can see that there's no high lows in between. There's just 1 high low, right? There's a higher high right there. And there's nothing else above it. So with this said, there's only 1 there. So this is actually a lot cleaner entry compared to the others. So price right here, broken close above it on this candle right here. Once it broke and closed above it, it pulled back right on this next candle. And then at this point, you would have had your pending order just waiting right here. So breaking close past it, one candle passes, it fakes out. Next candle over here now pushes up. Your pending order for a buy would be right here for a 300. You let the trade run, fills your order right there, goes up higher, straight to your TP. And there goes another example of a high-low scalp V2. So this is another example of a high-low scalp V2 that you would take. Let me see if there's any other entries here that you would avoid. Obviously, the ones later in the session you would avoid. So let me see if there's another one over here that would have came up and would have been avoided, of course. Actually, there's one here that could have been taken, and it probably still would have been okay. I think this is the same example we looked at earlier, though. Well, let me just show you guys. So let's just go back over here. Price broke past it. Okay, so here's the example right here. So this is where it actually broke past it. So again, right here, you want to confirm the trend. The trend here is obviously bullish because you can see all the pivots are above level 4. You want to confirm the price break and close past the nearest high low, which is right here. This candle right here broke and closed past it. You're looking for now the fake out for price to come back below. And then you're going to look for the correction. Okay, so here goes a fake out. Price breaks past it, fakes out right here, comes back up. At this point right here, you would have your pending order waiting to fill your trade. So now you just got a pending buy stop right there. You have it set for a 300. Again, this is an entry that would be good because there's only one higher on this area, right? There's one high right there. There's no other highs sitting around this area at the time of entry. So the candle broke past here. There's only one higher high at this point. Everything else is pretty much solid. Everything lines up. You're just waiting for price to come back up and fill your order. At this point here, your order is now filled, and then you can just let the trade run, go sideways for a bit, but eventually it swings up. And I mean, it takes a long time, but eventually it does hit TP right there. So there goes an example of another high-low scalp V2 that would have been taken. Let me see if an example that would be avoided. Okay, like this one right here. This one looks like it still plays through, but I would have avoided this one. So again, right here, same setup. Candle broke right there. Okay, so this is a clear example of one that I would avoid because price is obviously going sideways. The ATR is currently at 9. Low volatility, price is just going back and forth. Right here, again, we have a high level. You have a bullish trend here. You can see that price breaks and closes right here. When price breaks and closes, you'll see that there is like 1, 2, 3, 4, maybe 5, 6 highs right here, right? At this point, you're like, all right, price is going sideways. I probably don't want to take this trade. However, it still meets the criteria. So if you want to take the trade, you can. But going back to what Randy was mentioning before, this is one that I would avoid because there's so many high lows within one area right here that price is obviously, it's pretty obvious that it's going sideways. If you guys don't have the indicators, it won't be obvious because you won't have all these you won't have all this stuff marked up here to kind of show you that that's where price is bouncing from. You'll just see this. But if you guys do have the indicator, obviously this is probably an area to avoid. However, this is an entry. So price breaks and closes above right there. Breaks and closes again down here. So we have 1, 2, 3, 4. Fourth candle here, price fakes out. As it fakes out at this point, you can set your buy stop right there. TP stop loss, it sets at 300. This is one that I wouldn't have taken, but it looks like it does fill right there. And eventually it does push up and hit TP right there. So that is one of the criteria. And I should probably just add that to the list over here for the notes. So void if entry. I think that helps. Yeah. So I mean that's what kind of makes it obvious. The trade still works, but again, I wouldn't have taken this trade because this happened like super late at 9 o'clock. And then also I wouldn't have taken it because of the sideways movement right here. So yeah, there goes another example of an entry that I wouldn't take, but it does fit criteria right there. Let's see, Kenny's asking, do you think for the high-low scalp V2 that we need to confirm the market is trending or ranging? Yeah, possibly. I mean, that would help, Kenny. Yeah, no, exactly. You just answered the question. Yeah, no, it definitely would help. It's just harder for people who don't have the indicators, or it's harder for people who don't know how to identify, right? But I think it does help a lot when you're able to like point that out. So I think this kind of fixes that. Because it does work well. The strategy works very well, but only when the market is really trending or moving directional. It's kind of tricky because sometimes the market will be moving directional, sometimes it'll just go straight into a flat sideways market. But that's why you guys have me on the live session to kind of give you guys the hints. This only comes into play when people apply the strategy either on their own or outside in the live session. So let's see. The mall is asking, will it be possible to update the indicator to plot a line automatically on the high-low when the new higher or lower has been established? So we try to do that, Vimal, but the problem with that is that there just becomes way too many lines on the chart. We actually did have that before, but because the indicator repaints, like it isn't until it's established. Yeah, I know. We tried to do that too, but actually, let me talk to my brother about that because he did have that before. I forgot what the issues were, but that's actually because so here's the thing that kind of goes hand in hand with the SR indicator. Or not the regular SR, I think the SRV2. Let me see. Yeah, but let me talk to my brother about that because I know he had something like that kind of he created something like that, but then there was issues with it. I can't remember what the issue was. Yeah, it's not the same with the SR either. But yeah, let me talk to him about it and then we'll or yeah, if you want to talk about them while you can. Here, let me unmute you real quick. There you go. Yeah, I think you gotta unmute yourself. But you can if you want. If you want to talk, oh, there you go.
Sorry,
Hey,
can you hear me now?
yeah, no, we're good.
Oh, yes,
Awesome.
so yeah, so what I was saying was to kind of for example, right, in the chart that is showing, the higher low is actually not established. So once the market is moving, we ignore that higher low or a higher high and plot the previous higher high and previous high low. So in the one that is currently showing, we on the red candle we have a higher low. So that means that higher low is not established, but the higher high, that is the previous candle, and the previous higher low on 950, I think 950 or 950, yeah, those two are established exactly.
Mm-hmm.
Once the higher low gets established, it probably goes below the higher low, becomes lower low, and then goes up. Then we would probably have the new lower low a line, and then we can skip the other one. So it kind of keeps changing, but then only once it creates a new lower low or it creates a new higher high, we then take it. So until unless it's establishes, we don't plot it. I think that's what I was thinking. I mean, I may be
Yeah.
very weird here, but
Yeah, no, yeah. We had something like that before. I need to talk to my brother because he actually created something like this. We created this to identify when the market's going sideways. So like, obviously it works well. Like if this goes sideways like that. And then again, once this is established, it'll adjust to like say this one right here.
yeah,
Yeah.
exactly. Yeah.
And this thing just keeps following it. Yeah, no, there's a way to do it. I just need to, yeah, I'll talk to my brother. I think he'll be free this week or next week. He usually does the coding for me, so I'll have him make some changes, or if if he still has the code from the previous update, we can probably add that because yeah, that makes sense. If we do it just the most recent established higher highs or lower lows, it works. I think initially we had it where it was like every line, so there's so many here. It was when we used to trade the high-low scalp, just the original, and then also for liquidity push. And it was just too many lines on the chart. But yeah, I'll bring it up to him, and then hopefully we can get that put in. And I think it'll make a big difference to the markup.
Yep.
Yeah. All right,
Okay.
well, yeah, thanks. Yeah,
Thank you.
if there's any other questions, guys, regarding this here, feel free to put whatever input you guys have, and I'll bring it up to my brother who does the coding for me mainly. I'm still learning coding, but I'm nowhere near anywhere to do anything like this. I can just make small adjustments to stuff that we already have. But yeah, all right. Other than that, I think that's it for the high-low scalp V2s. So other than that, I think the only thing that we need to cover now is going to be the news correction strategy, which is not very difficult. Let's go back to, I think, the market yesterday. Let me check the news from yesterday. Let's go from this week. So we had news. Let's go to Monday, actually. Or let's see if there's, I think there was news yesterday too. The only problem with the news yesterday is that it was mixed. So it wasn't a good one to identify. Let's go to Monday. Monday at 7 o'clock. So this strategy isn't exactly, this is for sure just still a work in progress because we don't have enough criteria to really dial down on it. But basically the main gist of it is super straightforward. So there's news over here at 7 o'clock. If you guys remember, so right here on Monday, December 4th, there was news at 7 o'clock. It was negative news, right? So I'm just going to mark up news price right here at 7 o'clock. And then basically what we're looking for is we're looking for price to react to news. So since we have negative news, we're expecting price to come down, right? So with that said, we let price go in the opposite direction, which it ends up going, I think it ends up going, or what happened was we entered this like super early. Okay, so let me just, this wasn't a good example because I don't even think I took this trade on Monday. I didn't have any trades on Monday. Yeah, I didn't take the news trade on Monday because I wanted price to kind of pull up a little bit and then come down. So I'm just going to show you an example over here because this is typically what you would look for. So let me go over here real quick. We had news over here at 7 o'clock. What you're looking for is you're looking for a V1 pattern, right? So you're looking for basically a double body, or you're looking for price to break and close past structure. So what I was looking for here is I was looking for price to come up and get manipulated up here for a fake out and come back down. That's where I was going to take my entry from up here. But price never came up to that area. So if you wanted to take the strategy, it's a very speculative strategy. There's a couple different ways to enter it from. You can either enter it from right here, where you start to see the setup for the V1 variation. So here's one opportunity here to take the trade. And I think this is where everybody took their trade yesterday. You set it up for a 300. And that would be your initial entry right there. For me, I was looking for a discount. So I wanted price to push up higher and then give me the same pattern up here and then come back down, or even break past the structure or the sessions up here and then come back down. And then when it would come back down below it, that's where I would take my entry right here. So I get a discount, right? Because I want a discount where price is above the news price, because that's the target price point where I'm expecting price to go back to. So however, the actual entry would have happened right here for this one. I didn't take this entry, but you can see price comes back and forth and eventually it does come back down and hits full TP. So this is from the news that happened on Monday. This is the news correction strategy. This was more of a tricky one. It's not a good one, so I wouldn't really use that as a good example. I think last week we had a lot more. Let's see. November 27 to December 1st. Okay, so we had better ones over here. I believe on Friday. Yeah, on Friday we had news at 7 o'clock. No, it was kind of mixed. So we didn't take that. But I think there was news over here on. Okay, so here it was on the 30th. So let's go back to the 30th. News was positive. Here to the 30th. I could just take this off. It's not necessary. We already covered everything. I don't know what's going on with the candles here. Well, let's go here to the 30th. It was at 7 o'clock. All right. So the news happened in the chart. The news happened right here at 7 o'clock, right? So let's go and take a look. So again, right here, when the news happens at 7 o'clock, we look at the news calendar. You can see all the news here is positive. So we're expecting price to go back up. Price comes back down here for manipulation. You're looking for a V1 variation type pattern. There's no V1s there. So there's a V1 that's set up right here, but I don't think we took any entries there yet. We were waiting for price to kind of come down a little more. Actually, I think we did take that entry there. I can't remember if we did or not. This was on the 30th. Let me check my profits for that day. Yeah, so I actually did take that trade there. Where was it at? Yeah, so I actually took this trade right here. That's the same one that we marked up right here. The news happened at 7 o'clock. Right here, price came down. We saw a V1 variation right here. You can already see that you're getting in for a discount because there's a gap right here between here and the news price. So you pretty much got in at a discounted rate and you're able to get basically a free 250 pips. So what happened here was I entered at this point. Once this candle closed for the V1 variation type pattern, I entered for a long position right here. Your TP stop loss is set to 30.30. The trade kind of goes sideways for a bit, but eventually it swings back up and goes straight to TP right there. And the target price point, like I mentioned, was the news price right there. And that's exactly where it went to. So that was the first one that came up. And I think there was another one that was like right before it. Yeah, like right here. At 7 o'clock or 6:59. Was there another news event? Oh yeah, 6:45. Okay, so there was one right there at 7, and then another one at 6:45. So we had a news event right here at 6:45. Again, the news was positive right here at 6:45. So you're expecting the correction back up, right? So you have price coming down right here. You're looking for that V1 variation type pattern. Right here's the V1 variation. Again, you're having a little bit of space here to reach target price point, which is the news price right there. So again, same thing. You have a TP stop loss set up right here, and you're looking for that correction back to the upside, 30.30, let the trade run, full TP right there, and it keeps on going even further. There's a lot of confluences right here. This was not just, it was an entry for the news. It was also an entry for the V3 continuation right here and the V3 breakout, because there was a buy signal and then followed by a green candle right there. Price also bounced off the pivot. So there was a pivot scalp right here. There's also an intraday scalp. There's just a lot of entries that lined up with the same entry here. And that's why we took that entry on that same point right there too. So we took this entry on the same day. These are my profits that I locked in on that trade. And there goes an example of the news correction. So yeah, it's pretty simple, guys. You just have to look for news, look for price to get manipulated, and then take the correction back in the direction of price or the direction of news. So I think that's about it. If there's any other questions, guys, feel free to put them in the chat. I think we covered everything that we planned to cover today. Let me add this list to the video so that you guys know what was covered in here. But yeah, I think that's about it. We covered a lot of stuff today. You know, thanks for all the questions, guys, because you know, without those questions, we wouldn't really have much to cover. But we had a lot of stuff to cover today. And you know, thanks to Vimal over here with the idea of creating the lines on the high-low indicator, because that makes a big difference too for people like, you know, Kenny, who's having trouble or having, you know, he's trying to master identifying a trending or a sideways market. I think the high-low indicator does help a lot with identifying that, especially. So yeah, guys, that was pretty great. I mean, it was a good live session, good mentoring session with a ton of questions, ton of examples. I think we covered everything that we needed to. There's not really too much for us to cover. Over the next week or so, I'm going to start making videos for each of these topics so that you guys have something to reflect back to in the future. But I think if you guys ever want to review it, this mentoring session did cover a lot of stuff in pretty deep detail with examples and stuff. So if you ever want to go back to it, this will be available on the replay after we get off this. And I also have the topics. Let me see if I have it here. Yeah, so if you guys ever watch the YouTube videos, let me just show you guys real quick. Yeah, so if you guys ever go back to the mentoring sessions, just scroll down here and it'll show all the topics that were covered. So how to draw zones using the rectangle tool, MPS, breakout, variation, etc. I gotta make some edits here. I don't think I put everything that was needed in there. High-low scalp V2 and news correction. So I think that's about it. So, all right, guys, if you guys want to rewatch this later, it's going to be ready on the YouTube. So again, if you guys are new here and you guys want access to the indicators and the strategies, you know, just go to the website, kodikaitrades.com, click on unlock your free access right here. If you guys want to review any of these live sessions, just go to our YouTube channel, youtube.com/kodikaitrades, and pull up mentoring sessions. We got pretty much every mentoring session we've had over the past 3 to 5 years now. We have a ton of them here. So if you guys ever want to review it, just go back to the YouTube channel. You guys can see everything there. So, all right, guys, I think that's it for today. If you guys have any other questions, feel free to reach out. Otherwise, I will see you guys back here tomorrow.